Okay. Saturday, September 17, 2016. Going to review some North American charts for you real quick here. Okay. Oops. All right. This Canadian Venture Exchange Composite moved. These are sorted by best for the last 6 months. This one's moved up nearly 40% in 6 months. Pausing on, this is a weekly, 200 weekly moving average. This is going to be your juniors. This is all the small cap stuff. So this says it's two theories on here. This is either distribution or it's a pause before going higher, which would have to, in my case, I'd have to assume that it's metals and mining. Yeah. Okay, Russell 2000, basically a little bit short here and breaking out. Okay. Basically, I look at this as two corrective patterns, A, B, B to C, A to B to C. That's how I'm treating this. You have weekly, this is stochastics and MACD. You can see that this down here, they both came out from underneath. That was a pretty good move from here, and now they're both over the top. It can be extended for a while, trading here until it crossed, and then you were beginning to get divergences here. Okay, and here's where they crossed up together also, but this is a much better, you can see the weakness here, the divergence here. Okay, you could also treat this as a head, shoulder, head, and another shoulder. Okay, you want to own the small caps during the cycle. In theory, we should be at the cycle of the late 90s again with your technology. That's why you're seeing movement in Intel, Microsoft. Recent movement in Apple, which is it'll be interesting on how Apple plays out between now and those late October options. I think a lot of people were caught short on this. The news is just very overwhelming. Anybody that would own a Samsung phone would recall. Remember this, we've had batteries burn up before, Dell computers, Apple's, all, you name it. We've all had leaky batteries, flashlights, things of that nature. So right now I'm trading the Russell and the NASDAQ. NASDAQ is the strongest index of the bunch here. And the Russell, I'm treating this as basically a sideways pattern to down, okay, for now. We'll say that we'll treat this as a head and shoulders for now. This coming week, FOMC is going to be very important. We're going to have to see the NASDAQ hold itself together. We don't need an outside reversal there, say a weekly trade higher and close lower by Friday. See if there's a continuation pattern and it pulls the rest of the indexes up. But as for now, I'm treating this as just a head and shoulders as a primary, okay? And then in this sideways channel here that tick down to this area, okay? And remember, this is on a weekly basis. Indicators are overbought, but like I said, they can also continue on. But I'm going to treat this as sideways to down for right now until the end of the week and things clarify. Okay, small caps. Okay, we had a breakout. Broke out. to be sloppy about this and say that this is a retest. The indicators are quite strong, but they're also same type principle. They can continue on. The indicators continue on. So they call this like a rolling correction or a running correction. The individual issues on the inside rotate. New ones take over on the lead. Some of the stronger ones pull back, things of that nature. I'll treat this one as a retest for right now, even though the indicators are overbought. The thing here is that it had good momentum off the bottom, just like the previous one. So they can continue on. These are weekly, so it'll take a little while for these to turn here. Nearly 2 months for some of these to begin to turn. Okay. NASDAQ. Okay, NASDAQ you can see. All right, that's a little off. Come on, you. Nope. Pointer. Oh, select tool. Wrong tool. There we go. Oh, actually, that color is kind of freaky. All right, so we basically have it's pressed against resistance. This week's trade, second week of February, I think 3rd of September here. Basically pressed up against resistance. This week we had Apple, Amazon, a bunch of other stocks pressed upwards out of their recent pullback since the beginning of the month. Okay, here we have basically if we're looking for continuation on this higher, it needs to break out this week. That's why I was saying where we're going to watch for FOMC. Like I said before, on our pullbacks in this cycle, if you want to get out of the smokestack stocks and then buy your technology-based software, things of that nature, usually the strongest become the weakest. We've seen that rotation basically out of utility stocks right now, also REITs and medical, which are defensive. REITs, interest rate sensitive. Okay, I'm treating this as that there needs to be some follow through here this week. Okay, if there's a full reversal like we've seen choppiness in the S&P 500, basically we may get a reversal here. For now, basically, I'm treating that there is underlying strength in there, and it wants to go higher. Remember, this one took 15 years or so to finally eclipse its previous high in 2000. Same principle happened, I think, in the late 60s with the S&P and the Dow, and it took 15 years there for them to break back out in 1982. Started the bull market run till 2000. Okay, so that's the NASDAQ. NASDAQ 100, this is all the heavyweights here. Okay, remember I mentioned before that we talked about indexing. People are indexing. Okay, so some of these indexes, like if they chase after the Russell, that type of thing, if they're for growth or mid caps, or if they want the conglomerates collecting dividends, that kind of thing. These indexes, because they go to it for retirement, the whole indexing deal, issues begin to narrow and narrow and narrow. Right now I'm treating this as a breakout. We've had a pretty good move in Apple and then Amazon and things of that nature. remember that you can have, like we saw in the run up into 2000, it all was in the NASDAQ. You could have the same thing again where the industrial stocks have difficulty. If the dollar continues higher, like I said, I have a target of 103, 104 for right now. Once we clear the upper 90s here. On the dollar, FOMC, it's all about, they have a game plan. We'll just call it centrally planned economy. Another thing that was interesting was that the Fed's dual mandate is low inflation and full employment. And wouldn't you know it, they're doing 2 for 2, right? Okay, so why muck it up? Basically, we had the same quote unquote gift that were received after the Great Depression. Okay, so just leave it be. The only people I hear screaming about higher velocity of our landowners and entrepreneurs, right? we need more sales. You know, we have deflation, let alone disinflation. You know, disinflation is basically like a correction in the stock market. A deflation would be a depression in the stock market. How you tell the difference between the two of them. Deflation can be quite painful for those that own physicals, because all of a sudden, if you owned a copper mine or gold mine and it's just sitting there for right now, what's inside of it begins to deflate, and so your value drops. Occasionally we see that, what was that racetrack? Hollywood Park was turned into commercial blah, 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 because the ponies, the land was worth more for big boxes and bodies and stuff. Nice track. Okay, so back was, I guess, NASDAQ 100, I'm going to treat this as a breakout. Okay, I haven't gone through the individual issues. I did notice that the Zoom software works on my pad, so I can rummage through charts in a hurry. I have them indexed that way. I'll give that a shot over the weekend too, time permitting. But the NASDAQ I'm going to treat right now as a breakout, okay? And then any reversal by Friday, you know, similar to what they had in the S&P, where it's had chopped for a few weeks or a few days. That, you know, think of that as those daily bars as weekly bars. Same thing here. We'll know a lot more by the end of the week to see about these bars. Okay, click. NASDAQ 100. Here's the mid caps, basically the same thing. Broke on out, came back through. This will work fine here. 1550 would be what I'd like to see for the bulls to pull this thing out here. Technically, we'll just say that this is a sideways channel. If it breaks through and comes back through, usually you blast out the other end. So this may come down to 1300 here. We're talking 15%. So the bulls need to get this back up to 1550 here. They have to move about, what, 3% this week. Toronto Stock Exchange, same thing. We have probably a high for now, unless their economy changes to something other than selling oil to the United States and things of that nature. A little more technology in that. Find something for the people to do. There's not a lot of people in Canada, right? For the the natural resources that they have, but they have to structurally shift from out of the commodity business. I think commodities are going to have a difficult time here. There'll be ups and downs, weather-related type of things, but that secular cycle or super cycle, whatever, is over. Most of that in the commodities, I believe, is just pricing. That's all it was. Just moving that oil, right? Move that oil to 146. So now we have natural gas. It's the next one to play that game with. Okay, so Toronto Stock Exchange, feel that the indicators were all overbought. Okay, we're also getting kind of a double hook thing with the stochastics, and we failed to make a higher again. I will be nice and say that this big thing basically trades sideways at best. Yeah, sideways at best. We'll do it this way. It's kind of okay. So that's Toronto Stock Exchange. And here's the Wilshire. Now I've added some charts. They're going to be wider here. Now what I did is this is the Wilshire total. This is basically everything in the United States, we'll say, grouped into an index, and it's capital weighted. So the price times the issues outstanding. All right, so on here, what I have, what I'm looking at is this is from the beginning of the year. This will need to hold. This is the breakout. Okay, now we're pausing underneath here. Okay, so on the bull side, watch for any reversal and a jab back down below. Say something quick. Monday, Tuesday, Wednesday, trade down. Thursday, Friday, trade higher. So you're kind of looking for springboard or slingshot or catapult, where it comes through, breaks through, and then swings the other way. Because we'll use the NASDAQ 100 for leadership here. Okay, you also have, even though stochastics or MACD has crossed and is rolling over the stochastics here. So keep an eye on that. You can see, though, that both of them bottomed down in here, and it gave us some divergence. Okay, and they gave us a good swing higher. Now we're up here on the breakout. So the two theories here is that this is a pause before going higher, because it's quietly retesting down here at the lower end. This is what I'm looking for. Okay, you know that I'm looking at the large real estate cycle of 18 years. Okay, it's not going to peak for another 7 years. All right, so my underline is that we're going to go higher. Market's only been going up since I was born. My father was born. My grandfather was, you name it. The market only goes up because the hubris comes out, new things, new technologies, new industries come aboard, right? So it just keeps adding on itself. All right. You know, I have a bear slant through November. Okay. Now, it doesn't mean that we can't trade higher and come back through. Some of the other indexes, say the NASDAQ runs and the rest of the indexes are on pause. What money is left that's playing this game of owning equity in a company, all we're doing is flipping paper. That's all we're doing. What do you think this is worth? Is basically it. You can EBITDA all you want, but some of the stuff doesn't have a PE. The PEs are too high. On and on. It doesn't make any difference. I'm not a fundamentalist. I'm basically just eyeballing the charts with the psychology. Okay, so what money is left now begins to lose. Okay, say gold tanks or oil tanks or whatever. People get out of the commodities. Being short confuses the masses, something fierce. Having it go down, just everybody, 70, 80, 90% of them are born bullish. Gotta buy. The way to tell what type of person you are is if there's a football team and it's an underdog, that finds out what type of character you are. The Super Bowl with the Giants and the Patriots, what were they, 16-0, 17-0? It's a coin flip, right? But the money line on the Giants was 8-1. So I took the Giants because that was the opportunity presented to. I have to make a bet anyway. Do I bet $9 to win 1? Or do I want to bet $1 to win 8 on a coin flip? So I took the Giants. Lo and behold, it came out. That's how that works. That's the type of person I am. I don't go after the underdog, but if the odds present themselves favorable like that, I'll take it. So on here on the Wilshire, this is the total market. Okay, so it's basically telling me that it tried to go higher, didn't do it, and we're pausing down here. The more time that it pauses sideways, it gets me a little more nervous here, because then that gets to be distribution, especially if this pauses and all it's moving is just the NASDAQ stocks. Okay, So you're having a divergence within the stocks themselves. My next video I'll do on international indexes, and we'll take a look at the DAX, okay, which is what the number one exporting country in the world, Germany, okay, and then you have European Union, and you have the euro that I think is probably going to, what did I say, like 108 area, okay. And then the pound moves smartly this week too. But for right now, I'm going to treat this as that this is basically, number one, it's just a pause on the breakout. Okay. But if we don't get either touch through this month's low and we'll just say the pivot area, we need to get a direction here. All right. The more time we spend sideways here, I'm going to say it's more distribution, because we'll see the divergence in indexes. They'll be talking about fewer and fewer stocks are moving, we'll say, and they're all pilot whatever money is left chasing after something. Like, we'll just use Apple calls for this week. I mean, we looked at earlier videos where Apple calls that people were buying 190s. Okay, there's open interest up there and people were buying them. So quite the interesting deal for Apple between now and the end of October. My slant is bearish. I don't care if it goes to 150. I just look at it as whenever you're the number one market cap stock, you can only go down. And that's how I'm looking at it. It's basically the same thing as that Patriots-Giants football game. They don't stay number one forever. So I'm looking for probably number two, we'll say Google behind it would be the one to overtake. So I'll do a spread on long Google, Apple, that kind of thing. All right. Okay, so on the Wilshire here, basically, like I said, I'm going to treat this as a pause of a retest on the breakout. It needs to hold, but it needs to do something here. If it cracks, it's going to crack hard. We'll see that in the next chart. Okay. Bigger picture. Here we go from the 2011 low. Nice call, Kev. Thank you. All right. So we have it up to here. Okay. Then we have August of 15, which was China deval. We had a bounce up. This basically looks like an ABC correction, held on the 200 weekly moving average here. Okay, continued higher, but now we're the kind of the ABC or the 1, 2, 3 pattern. 1, 2, 3 again. So to me, we're kind of looking at, it was another breakout and it failed to do so. Okay. Indicators on the weekly are overbought too, but it doesn't mean they can't continue on higher here. All right. If this should break out, if we get the whole market, the angle of ascent should increase. That'll, of course, get wind of the Fed, who has their own little model for equity prices. Okay. Now, remember that if commodities are dead and interest rates are dead, unless you're going to buy paper and hold it to par, basically, or the debt. Okay. And then equities roll over. What's left, of course, is going to be real estate. And so that's how we get the end cycle of the real estate cycle. We have, 1987 was the stock market peak. Okay. Well, actually, we had a huge correction, crash per se. All right. That was also the peak of the real estate market. Then in 1996, 56, Orange County, California filed for bankruptcy, and that was the bottom. Just like this time around, it was San Bernardino County filed bankruptcy. Okay, and quote unquote, we have a bottom. All right, so now equities, we're in that swing of the 90s, right? So we have the bottom in real estate in 95, 96. We have a move up, but oil became an issue, just like with the Thai baht. And we had an incident with the old long-term capital management hedge fund blowing up, and that was cause of a problem. And then we also had the bottom in oil, and that caused an issue for Russia. And but even though we had pullbacks of 15% or so, The market continued on through 98, 99, even though the New York Stock Exchange advanced decline basically kept declining from Greenspan's 96 irrational exuberance speech. So we did have one segment of the stock market, the NASDAQ, get all giddy with the excitement of the .com. And what do we have now? We have the whole cloud thing. Once the public lashes onto something, then we'll find out what it is. But for most of them, how it behaves is similar to like the gold rush. They all rush into something here. What was just recent that I thought was, Bitcoin, that's right, Bitcoin, that kind of thing. Cryptocurrencies, I thought, were a fad, we'll say. Well, we'll see how it plays out here, won't we? All right, so here I also have, this is just broken up into quadrants here. Okay. Follow up for the bears. If this breaks up to a new high and reverses and comes back through, the further that it goes up in the angle of the descent, the bigger the pain here. Okay. Even if we continue higher, like I think the stock market's going to double from here. Okay. And even if we lose a half, I still think it's gonna. Then it'll go up. What? 150%, right? What did I say? If the S&P gets, double, triples. Okay, if the NASDAQ or the S&P drops to 1,600 or 1,100, okay. I'm just using history on those, okay. If we repeat history, this is where it should be. If we repeat history, this is where it should be. My longer view, of course, is higher. I think the stock market's going to double from here into the real estate cycle in theory, okay, the whole macroeconomic type deal. Biggest concern would be the inflation from the baby boomers, their wealth being passed on. Okay, how much of that is going to be kept in trusts and held? Because you're containing all the wealth that was basically consumed when America took over in the 1870s from Britain for the industrial side of things. So you have all that wealth, people that bought RCA, that turned into General Electric, things of that nature. Your IBMs. All your oil companies, going back to these, like buying IBM in the 60s, that kind of thing, 1960s. You have 80 years of wealth minimum for, I would have to say, the bell curve here for the boomers, bell curve of a bell curve. Okay, and how is that going to be transferred? That's where I see inflation, indiscriminately buying of stuff. Cars, homes, things of that nature over the next 15, 20 years. All right. I'm looking for a peak of stagflation into the next following real estate cycle into the 2040 period is where I'd see, we'll call it hyperinflation, but it's not going to be, it's just going to be we'll call it a nuisance, whatever the opposite of now is. All right. So I'm gonna treat this here as that there is underlying weakness until it clears. Wow, it's pretty Captain Obvious there. But the thing is, this is a total market, and we basically have been going sideways for a while. So it's two things. It's either this is a pause before going higher, or this is just a lot of distribution and that we're going to roll over. Okay. And here was at 2016. I talked about the 2014 lows, and that's what we hit, i.e. the transports, Dow transports. Okay, so now this time again, I've looked at some charts. We can actually talk about 12 and 13 now on a pullback. Okay, basically to like 24%. Right now, running corrections, your individual issues, at least 15%. So if you open up the NASDAQ or whatever and find some names that have dropped 15% or more, we'll say, and we'll just say the last 3 months, that kind of thing. Okay, so that's the Wilshire. All right. Okay, Russell 3000, basically the same thing, somewhat of a breakout, come back in. Hopefully this is a pause. All right. Okay. So the Russell 100, basically the same thing, or Russell 1000, basically the same thing. Breakout came back in and paused on the breakout. So I have to treat this as just a gentle retest. Any further continuation in these that are like this, the angle of ascent will increase sharply. Just like how you saw the move in Apple, basically the same way. I am still having defensive type on this, just due to the fact of my target for this year was only 2,400. We're up to 22. I basically said, you guys can have the last 10%. I'm treating this right now as that there's overlying history for where we're at. Retail stocks, you can kind of tell that things are just a little bit on the soft side. Friday we had consumer sentiment, same kind of thing. We need to cheer everybody up going into the holiday season, right? But we have to find another round of home buyers and things of that nature. MX Composite, basically this one peaked out in 14. This has a lot of REITs and closed-end funds. What else is in there? Master limited partnerships, your miners and drillers, things of that nature. That's where they like to hide. So we moved out of the commodity cycle, and now we're going to move into the paper cycle. Your technology, business services, things of that. America's 84% services, so we have to go find it there. S&P 100, this one, for how it went up and came back down, this first gut instinct was this is a little bit weaker here. S2 would probably be your target. That's how I'm going to treat this. This one should fall apart in a hurry here. You can definitely tell Kevin's tone, right? All right. If the basically loses, this is kind of a sharp trend line, basically loses this and of course loses that, then it should fall quickly down to here. That's what I'm looking for. We're only a couple weeks into September. I said through November, which is kind of different. But we have, the interest rate thing. People are going to have to change columns on their spreadsheets, right? Funding debt, funding for buybacks, things of that nature. So we, like I said, commodities are rolling. We'll just say down, sideways to down. We'll call it dead money. Equities, a correction. We'll just say a hard correction here. I don't expect a bear market. I don't think this to last 9 months. Just something short term, just enough to shake up the system, to force people in their money back into it. I didn't think stocks were overvalued, but they're not cheap either. So I'm willing to buy, looking out to say the next decade, that kind of thing. If I get my inflation, like I was talking about before with the wealth transfer from the baby boomers to their Gen Xers, I'm one of those. Born in the summer of love. All right, in the fall of summer of love. Yeah, I suppose, right? Hey, look, it's the fruit. That's me. And as I always joke, my parents I was a preemie. They were married in April and I was born in October. So I'm a preemie, a rounded, rotund preemie, very healthy preemie. All right. Self-basting. All right, back to this one here. First thing, got to be very careful on the S&P 100. This one used to be a party before we got the futures all figured out back in the 80s. OEX, that was our leader before we got ourselves the S&P 500 futures. And then all of a sudden it was $500 a point, $300 an index. And it's like, yeah. And then we dropped it to $250. Yeah. And then we made it even more funner. We dropped it down on the Globex, which I used to dust because nobody played on the Globex machine. Yeah, in the office there. And then the $50 E-mini took over. Yeah, and that's what we like to follow, even though it's the NASDAQ that's the one that's leading the way here. So in theory, we should roll out of one into the other. I still prefer the S&P just due to the fact that I've been staring at it for 30 years. Even though you have the stock market rate, you may be in the wrong index. Okay, kind of like the Russell leading the way, and then the NASDAQ, and then the S&P. A little cautious on the ones that broke out to new highs, right? That's what not all of them broke out for those Dow theory type people, which we'll start rolling into here. Very cautious on here. Any further selling next week with FOMC, or we'll just say this week with FOMC. Keep selling it. Yes, and sell it hard. It should be precipitous. And Europe maybe already doing it, started the party for us. And then we just need Japan and China to join in on that. And Australia, which I think the Aussie index should be cut in half. That's my stand. All right. Okay, that's OEX. Large caps S&P 500 broke on out, came back. Look at that. What do you know? Okay, same thing. Basically, pause on a breakout. We'll just call it a pause on a breakout. Funny line, Kev. I know. There, here. Doesn't mean that it's not going to stop, but we have this energy from the sideways, right? It's like a coil being tightened. What's that, 14? So from 14, 15, and 16. And a break, we should get a continuation here, 2324, what is that, 2434. That's fine. Hey, I can always buy calls too, right? Because basically I'm hedged. You know, the risks to my side, well, in theory, I'm hedged. So there really isn't much risk because I'm hedged. If it goes down, I'm a happy camper because I can buy at a discount for the following swing higher. If it goes higher from here, hey, I am hedged. Just real quickly, just to buy some futures contracts, buy them, I'm in, you know, or options, however you look at it. Boom, I'm back in. And remember, it's not everything's just in one thing. I have currencies and debt. See, I'd rather play the short side in debt than buy equities. Fair enough. Brexit was the bottom in interest rates, I believe. Let's save it first, and then we'll clear the drawings. I'll get my mouse back. Go to the next one. Here's the world index. I changed some lines on here and threw on some stuff. All right. I'm not an Elliott Wave practitioner. I'm a practitioner, right? I'm running a practice, yes. Practicing, but I'm not on these here. I think they're running flats. I'm not sure. I have to get your book out, Cav. An ABC pattern, again. Okay. So what I'm looking for here is this would be like, say, a one wave down, two wave back up. It's a little bit high. And then come lower is how I'm kind of treating this. Now, remember, this is the world index. Okay, so here we have the big party here. 2014, 2015 was the high for the world. We came down. Let's see here. This is the Chinese devalue. This is the beginning of the year correction when we got it back into commodities and things. Basically this year was a buying opportunity for the whole election year deal. Brexit, and then here we are we're coming up to the US election, and it's going to be interesting in general. I'll say we have the audacity of a Richard Nixon, and then I'm not sure on the other one. Go gently through the night, whatever. I'm not sure. To me, I usually go vote for whoever can fight their way out of a paper bag. But what I'd really like to see is an artist, you know, someone that actually sees the leaves on the trees, fresh air. A naturalist, yes. Like Teddy Roosevelt. I don't know. But, you know, just, you know, we're back to the whole, it's Earth, one planet, we're all here, you know, let's do our best. Ooh, what do I have going on here? All right, on a weekly, I have some sort of golden cross thing. Is it a golden? No, it's wobbling. It's shaking back and forth between it's a death cross. That's what we have on a weekly basis here. They've merged. So the pivot basically. So the whole world thing is resting on 305. I pointed out a chart that I thought this thing could just crater something fierce. Earth itself, the whole entire Earth, we basically have the middle class it's kind of melding into the rest of the world. Okay, so our split is something fierce between what the industrialists want us to buy and what we can afford. So it's kind of like the issues with Japan. You have to have, you either, cut it out, the graph and stuff, the pricing, like say for a pound of rice, and try and make it market. Or it's not going to end well, because the marketplace will adjust those prices for you. And then everything gets sold off because you can't support it anymore. We should take away the support pricing in sugar right now, right? It's no need to help out those guys, right? All right. So on this one here, I'm going to take the world one as this, it's an ugly looking head and shoulders, but we'll say shoulder, head, shoulder with a lower shoulder. Weakness, any global weakness this week, and this thing can just turn ugly in a hurry. Okay. And here's the global itself again on the big picture. Now what I've done here is I've taken the high, just kind of threw on. If I thought we were going to drop back, like here we have the 12 again I was talking about, 13 period, okay. From the high down to this level, or even if you take S2, which is 20% lower, so it's about roughly half it. It's a 42% drop. If we manage to poke our head through and then come back down, we may have just a global, the whole monetary type deal here. This is, we've okay, you have negative interest rates. It's not in the textbook. It's literally not enticing entrepreneurial. The money's going into, they're buying things that it's like real estate, building buildings, and nobody to fill them. I talked about, U.S. birth rate at 188, and I think Mexico at 288. So Mexico's birth rate is the same as America was in the 80s, early 80s. So Earth may have peaked out, and we've gone as far as we can. And of course, it's awful because the masses are short on cash, which of course they need. I bless them when they put the weight of the shoulders of a football stadium on the people. How about the people that use it? That could, judging by the ticket prices and parking and everything else, you're going to have to put this in perspective, people here. The Colosseum in Rome is a classic example. All right. Now on this one, it's a little tough to read here. We're back to that same pattern. This is on a monthly basis. We basically have an outside month for right now. I have a drop of 42% and a drop of 67%. And basically how I got down to the 67% drop is I kind of ran it back to when China got involved in the World Trade Organization. Okay. But what I'm looking at is if we just crack the upper end, you can see here what we're trying to do, put money into the system, more people on the planet. Things should work this way because stocks only go up, right? But if there's a failure here, we may have a bout of prices coming down. Think of high-end real estate and buildings and things. You have deflation in real estate, okay? Outside of think of like Vancouver, things of that nature where things are out of whack and they revert to the norm, revert to the mean, that kind of thing. But it's all at time, okay? If the inflation, like I say, does pan through, that will help to support prices. But if we have some sort of deflationary period across asset classes, equities, and we already have it started in debt, right? Equities and real estate in a short-term basis. Think of this now as real estate pullback of right before 2000, okay? Interest rate, really, things just adjust. The size of homes or the cost of homes. What's your median home price? Yes, it's going up, but if it comes back that way, 10-20%. All right. Remember that with their baby boomers, they have the largest segment of the population, and they probably have the longest memories, but mostly of the shortest one. So what I'm getting at is that all this money we've pumped into the system, we just kind of walk away from it again. And then that's where depression type deal kicks in, or deflation kicks in. Shouldn't say depression, because we're basically kind of treading water there, which is fine. The Fed got their full employment per se of those looking for work, and low inflation. But something's going to have to give, right? Because that's not normal, even though it worked out. All right, depression or deflation in commodities and real estate. Boom, boom, boom kind of thing. We're back to the whole credit freeze again. I don't think that's it. I think it will just say a lack of buyers. Okay. Because if take for example, we have the dichotomy, the tier between the haves and the have-nots. You expect your holdings as the 1/10 of 1% kind of thing, the masses to come to the aid. What do we have? Freddie Mac, those kind of, take a look at that. Not too much going on there. So don't expect the little ones to belly out again. We will inject funds, but it's not going to be asset relief part 2 here. Because I'm gonna vote they just gonna have to let the market resettle everything, bring it back down to normal. All you have is credit here, and all we have is available cash. So that's how I look at this big picture here, is that everything begins to reset across the planet. Earth peaked out population-wise. You know, we've done as much inflating as possible with assets. And it just rolls over hard. Okay. And Dow Jones Industrial Average, it poked its head through. Same thing with the trend line. If there's a loss of pivot, which is next year, this is this year's pivot, which is at the bottom of the line. Amazing how the ARBs or the algos can do that. Bingo! Here's the pivot for next year. Okay. Yeah, basically it's just going to hold like I said, basically it's just a gentle retest of the breakout. That's how I'm going to treat this. Composite, a little different story here. You can see where you were going to have a cross. You did have this, I'm going to assume there was a cross on the daily, but here's the weekly. Smokestack stocks, New York Stock Exchange, having difficulty. They'll also have difficulty with repatriating the dollars. Now, this is another one. It's wider that I added in today. What I have is the Wilshire, which is the total market of the United States divided by VIX. Okay, now in theory, as stock prices as a whole go up and VIX comes down, this is your ratio between them. Here we're looking back on a daily basis. So we can see a high here in May of 14. Okay, so overall, that's when the Wilshire 5,000 total market was at its high, and VIX in relation was at the low. All right, we have a spike down here in October of 14, and then we had another one here in August. This is the Chinese deval, and then we moved higher, and kind of say that this is a double top again, and it's come back. Okay, caution. I say caution. Okay, now going back even further here, here you have it. 2008-9, right? So this was the high end of the 7 with the total market and the VIX. and we've been trading above it. One, if stock prices are making new high, VIX we know is fixed. VIX is going to be stuck between, we'll call it 15. Okay, so we know it'll drop to like single digits. You know, once it ran to 150 something. Okay, most of the time it probably goes to like 60 to 80. Okay, when it gets a spike. Okay, so equity prices are higher, so naturally. But how I use this is on the downside. Okay, stocks made an all-time high. We'll say that here's a double top though. Stocks made an all-time high. VIX basically got back to where it was before. Okay, so that's at the high. The highs will always make new highs if equity prices always go up because VIX stays relatively the same except for when VIX does its VIX thing and spikes. So here we are in this situation. So now I want to play it on the downside because as VIX goes higher and the stock prices come down, we're going to see areas of here that can relate. Okay, so here we have 2011 and 2012. Okay, so basically here we have the 15-16 for this year. Okay, continuation through the pivot area here. All right. Continuation to here, I expect it to come down into between the 300 and the 400 range of this ratio, okay? Once, though, it crosses, if it crosses pivot, we'll look at it again. But in the meantime, I'm just saying, hey, we have, quote-unquote, a double top, which is really, it's nothing, right? Because equity prices can go higher and make new highs, but the ratio on the downside, okay? So that's where I got kind of a little bit on the nervous side after the swing after Brexit, because what I was seeing in individual charts, it didn't jibe with the whole thing, with the global and individuals, just like we saw markets topping. Some of them topped in 2015, some of them 14. All right, same principle again, double top type of thing. This is before the peak, okay? The washout. Some more washouts. Now here we are again rolling over. So I'm going to have to say that there's going to be pressure on stocks for now. Okay, even if it comes down and pauses into this area. Okay, like here was the beginning of the year, and we moved down half. Some sort of shaking on for the FOMC. Positive, positive or negative. Either stocks aren't going to go sideways because of the VIX is telling us that. Something's going to have to give. Okay, stocks are either going to have to go higher here and their angle of ascent will increase sharply, or they're going to come down. And then basically how I look at it is those who want to buy the professionals, they're going to sit on their hands on bids and kind of wait this thing out. We did have a good move on Friday, and then basically we've done chopping, and to me that's a lot of, I'd say, distribution. Dow Jones Composite, this is for those this is the Dow 65, the industrials, the transports, and the utilities. Okay, basically multiple tops here and another top here, and we rolled over. We're kind of, at best, we're inside a channel. Stuck in a channel, and I'll be kind of nice about it here and go across this way. All right. Moving averages, you can use them as your trailing stop, but I like to use them whenever they hit, say on a weekly basis as a buying opportunity. Okay, because usually you get one or two on there that it'll come back. Okay, the next time if it should come back here, okay, I'm going to say it's going to roll over because of it didn't have much on the follow through. You can see that this one actually held. This is the 50 week. Okay, it kind of held. You can use the same thing here as a warning sign or a trigger. I'd shorten mine up. Let me take a look here real quick. I think I can come back. I think I'm near the end of them. Utilities and transports. Okay, so utilities coming off the high. These is pivot here, R1 and R2, came up to R2, rolled over. Here's pivot for next year. You can see here it'd be R1 and R2, S1 and S2. Okay. I'd probably play utilities down to 480 to 500 if interest rates continue higher through, say, 17 and 18, more into 2018, I would. Okay, utilities, transports. Okay, so for the Dow theorists, utilities are now coming down. Dow is just kind of pausing, I believe. And transports are the key to this one. It does look like we're getting some sort of pause here, possibly go higher here. This was the talk about buying in 2014. I think that was there, wasn't it? Yeah, I think this was the 2014 you want to buy there. And we went even further, 2013. Okay, area to buy. All right, so here we are. I'm going to treat this as a pause and going higher for now. Okay, just because of the moving averages, basically supporting price. If there is a follow through here, then it should continue higher on the transports. Okay, now what I did here for these is this is the NASDAQ 100 versus the comp. If the whole herd can't buy everything in the comp, they'll probably run to the NASDAQ. So this shows the ratio spread between the two. And as it trends higher, it says that the NASDAQ, the Qs are moving faster than the underlying index, the total market. Okay, this is a daily. Okay, so here's a weekly. You can see how it was leading. Okay, for now. And that's at, I want to go back and take a look at, where was it here? The Dow Jones. Okay, make it bigger. Take it down to daily. Actually, I want to put on a moving average. Where are we at? Simple moving average of 40 first. Because that was being old school, 40-week moving average. And we used, because 40, you had 40-day, and then when you turned it to 40-week, it gave you a 200-day, just roughly. All right. So what I'm doing here is I'm looking at, here's 2011, okay. Found support on the 200-day moving average. That to me was a buy, because we're coming off the low. Let's see, can I jam it in here? All right, these are equity bars on the Dow Composite, okay. What I wanted to do is just look at the 40 period here. You can see that it held up better than the 50 period, okay. What I'm looking for is it to come back underneath here and see where, because what we're looking for is we're looking for a trigger, okay. All right, so breakout, come back through, breakout. So this is just a daily. You don't have to worry about the crosses on here. What I was looking for was just like a poor man's trend line here. Okay, broke through, broke through. We basically gapped below the 40 and the 50 here. So that's never very good when you gap. On the downside here, you gap on the upside, which is positive. Okay, but what I'm looking for here is probably the retest, 6,400. All right, so we gapped all of them lower. Okay, so now what I'm doing is I'm looking for retests here on the upside. All right, I need to save this. Ooh, do you want to save it in here? You betcha. And daily, right? Because you already have a weekly. Okay, I just wanted to look at this as where would be a possible retest if you do get a swing into Wednesday here. All right. Okay, I'm going to leave you at that. I'm going to go through international indexes next. And thank you for watching the major market indexes for Kevin Bance's weekend review.